You step outside one day, buy a $3 coffee from your favorite coffee shop, and suddenly, $35 disappears from your account. This is not a scam. This is not fraud. And it is not a technical mistake. Your own bank did this. Without any warning. Without your permission. Just a hidden charge, sitting there like it's completely normal. But here's the most shocking part. This doesn't just happen once a day to one person. It happens to millions of Americans every single day. And if we add up these tiny fees, they turn into billions of dollars a year. In 2024 alone, consumers paid $12.1 billion in these fees. This all comes from tiny moments that most people don't even notice. So the real question is, how exactly does a simple $3 purchase turn into a $35 loss? And how are banks getting so rich from this one little trick? This whole game is called an overdraft fee. At first glance, it sounds very simple and logical. You had less money in your account, you spent a little more, and the bank charged you a penalty. Fair enough, right? It was your mistake, so you got the punishment. But when you look inside this system, the story isn't that straightforward. Let's say you have exactly $10 left in your account. You go to the market and buy an item for $12. You're short by just $2. Now, logically, you would expect your card to be declined, or maybe get a small, insufficient funds warning on your phone. But instead, the bank quietly allows the transaction. You think everything is normal. You take your item and leave. But a few hours later, the bank slaps a $30 or an average $33.58 fee on your account. Some banks even charge up to $35 or $36. Just for being $2 short, you have to pay a $35 fine. That is not just a penalty. It is a proper, well-designed system. A machine waiting for your tiny mistake. And here's where things get even worse. Because in real life, the mistake is rarely limited to just one transaction. Imagine you have a very busy day. You wake up and go about your routine. You buy lunch, then you get gas for your car. And on the way back, you grab a small snack. These are three simple purchases. First, you spent $8. Then you spent $6. And finally, you spent $4. At this point, your account looks perfectly normal because phone apps don't update instantly. So you don't think twice. But behind the scenes, in the bank server room, a completely different game is being played. The bank does not process these transactions in the order you made them. Many banks used a trick called high-to-low reordering. This means they process the largest transaction first. And that one single decision instantly pushes your account into a negative balance. Now your balance has dropped below zero. And every small transaction that comes after, it triggers its own separate $35 overdraft fee, meaning $35, then $35, and then another $35. A normal day suddenly turns into over $100 in bank charges. And this didn't happen because you spent too much money. It happened because the system was designed to charge you the maximum amount of fees possible. You might be wondering, were banks always like this? The answer is no. In the 1990s, the concept of overdraft started as a courtesy or a favor from the bank. Back then, people wrote checks. If someone wrote a check and had insufficient funds, the check would bounce, causing them embarrassment in the market. Banks said, "Don't worry, we will clear your check. We'll just take a small fee." But then debit cards arrived, and banks realized that this courtesy was actually a massive gold mine. This little favor turned into a huge profit center for banks. By 2011, these fees were putting nearly $30 billion a year into the bank's pockets under the name of overdraft protection. Banks started trapping people. People thought they were being protected, while in reality, they were being squeezed for every mistake. Now you might think, but don't most people in America use credit cards? Yes, absolutely. Millions of Americans use credit cards every day for shopping, for travel, for cashback and rewards. But here is a massive, fundamental difference that banks never highlight. When you use a credit card, you're spending the bank's money. You borrow now and pay later. But when you use a debit card, you're spending your own hard-earned money directly from your checking account. And these overdraft fees? They only apply to debit cards and checking accounts, not credit cards. This means this system targets the millions of people who rely on their own money for their daily needs. It punishes those who want to live within their means instead of going into debt. And the story gets even more interesting here. Banks don't rely on just one way to make money. They have built multiple systems at the same time. On one side, there are credit cards, where they make money through interest. If you don't pay your full credit card bill, they repeatedly charge you heavy interest. And on the other side, there are debit accounts, where they make money through fees, overdraft fees, monthly maintenance fees, ATM charges, hidden charges up to $4.59 for out-of-network ATM withdrawals. So it doesn't matter if you're spending your own money or money you don't have. The system is designed so that the bank will always profit. Now step back and look at the whole picture. This isn't just about one person's mistake. Major banks like JP Morgan Chase and Wells Fargo made over $1 billion in profit from overdraft fees in 2024 alone. Even Navy Federal Credit Union, which serves the military and their families, collected $335 million in a single year. Shockingly, Navy Federal was even fined $95 million by the government for charging these surprise fees. Millions of Americans rely on debit cards for their everyday lives. Groceries, electric bills, car gas, and small financial mistakes can happen to anyone. An automatic payment hits earlier than expected. Your salary arrives a day late, or an app subscription quietly renews in the background that you completely forgot about. And in just one moment, your account goes negative. A tiny mistake becomes a massive fee. Multiply this reality by millions of people, and you get billions of dollars in revenue every year. This is a huge portion of the bank's income, built entirely on the minor, everyday mistakes of normal people. So why doesn't this stop? Why don't people take to the streets? The answer is hidden in our psychology. It depends on how we feel. When a mistake happens, it feels very small. It was just a few dollars short, and the fee that gets applied feels manageable. It's okay. It's only $35. And most importantly, it all feels temporary. The human brain comforts itself by saying, "I'll be more careful next time." But then life moves on at its own pace. Another unexpected bill, another delayed payment, another minor miscalculation. And before you even realize it, those small fees start piling up. $35 becomes $1.70. $70 becomes $1.40. You didn't spend this money on happiness or buying something. These are just penalties. Quiet, repeated, and easily ignored. Banks take advantage of this exact weakness of ours. But the picture is slowly changing now. The Consumer Financial Protection Bureau finally set its sights on this system. In late 2024, the CFPB finalized a new rule that will strictly limit the overdraft fee to $5 for large banks. Alongside this, a new generation of digital banks has started bringing change to the market. Banks like SoFi, Chime, Ally Bank, and Capital One have completely eliminated these overdraft fees. They decided they won't punish their customers for small mistakes. This is why millions of people are now leaving traditional banks and shifting towards these modern, fee-free alternatives. Now, think about this. If millions of people lose a little bit of their money every month, it becomes a massive, predictable, and almost guaranteed stream of income. This profit doesn't come from big purchases. It doesn't come from luxury spending. It comes from the everyday mistakes of everyday people. So the next time you see a small fee on your bank statement, don't ignore it. Look at it closely. Because in today's financial system, you're not just paying for what you buy. Sometimes you are paying for how the system is designed. And the most powerful businesses in the world, they don't rely on your big payments. They survive on these small payments. They're so quiet, you don't even realize they're happening. If you learned something new from this video and want to continue exposing these hidden financial traps, make sure to hit that subscribe button right now and turn on the bell icon. Leaving a like and subscribing really helps us create more deep dive investigations. So drop a comment below and let us know if you've ever been hit by these unfair bank fees. And if you think businesses only make money from what you spend, wait until you see the ones that make money without charging you at all. Apps you use every single day that don't take a penny from you, but still generate billions of dollars. Because in our next video, we're going to break down a business model that turns your time, your attention, and even your habits into the most powerful money machine in the world. And once you see this reality, you will never be able to scroll through your phone the same way again.